Welcome to our second monthly update about what's going on in the housing and mortgage market at the moment. I'm Kevin Oakes. I'm an independent estate agent. I've got, as usual, with me Ross Marshall from Mortgage Evolution. Ross, tell us a bit about yourself.
Hi, Kevin. Thanks for having me back again.
Yeah,
I am an independent mortgage advisor. I work with Mortgage Evolution, hence the background in the jumper I'm
fully
repping
branded.
today.
Yep.
We are a completely independent brokerage. There's four of us brokers, and we do kind of anything to do with property finance. We're based up on Chislehurst High Street. We haven't got a shop front, but that's where our office is. So we're sort of local to you. That's how we met.
Good stuff. Welcome. Thank you for giving up your time. So we're going to be talking about the mortgage market primarily and how that then impacts on the housing market and what I do. Obviously, we did our first one last month, had loads of comments and good feedback from people that were watching that. So thank you for your contribution, Ross. Um, what's changed since we last spoke?
So it was an interesting month to have the first one last month with
Yeah.
events in the Middle East. It has certainly calmed down from a market point of view. How long that lasts is anyone's guess. I don't want to go over what we did last month, but obviously there's a lot going on in the world, so there's no certainty on anything in the short, medium, or long term, particularly. What we've seen is after a spike in rates, which is where we were when we spoke at the end of March, that lenders have settled and started to bring rates down slightly. They're not back to where they were kind of end of February, before Middle East kicked off. But they have started to come down a little bit. And I think lenders are now, after an initial shock, looking to do what they can to lend again, to be helpful to clients,
So
or
if we can
to
quantify
buyers.
that a little bit, I think we were looking around sort of 4.5, 4.75% for a traditional mortgage. Bit of variance, you're the expert, obviously, and it went up
Yep.
about 1 percentage point. And then how far down has that now come in the last month?
Yeah, so we were so end of February, say pre-Iran, and we were looking in the mid to high threes. That was up to about a 5% for a 90% loan to value residential mortgage. And that 5% just crept back down under 4%. As I say, it's not a big drop from lenders, but they are coming back down.
I think you made a comment last month, and I certainly had a similar comment from somebody that had watched the video to say that, we are looking at interest rates, they've gone up in the last month or so, and as you say, they're coming back down again. But we're comparing them to a very unusual period of time after COVID where mortgage rates almost didn't exist. They were so low, it was crazy. It was almost interest free, wasn't it? If you go back to a more traditional time, 10 years ago, for example, um, the rates that you're quoting now are normal, as it were.
Absolutely. So if you go back to kind of the 90s, that period of time to now, COVID was very unusual. Rates sort of sit in the sort of 3 to 5%, maybe 5.5% region, which is where we've been for the last 18 months, 2 years. There was a bit of a shock after Liz Truss's budget in 2022. That's when we had really high rates. But that has settled down. And it's quite interesting in terms of timeline that people who are coming off a 5 year fix now for a remortgage still have, some of them, that 1 point something mortgage,
Yeah.
where they locked in right at the end before the Liz Truss budget. And we're having to give them bad news that their rates going up to into the fours or low 5%, whereas people who are on a 2 year fix, their rates generally are either very, very similar or down slightly. So that's a better news to deliver. And it just shows the flexibility or the fluctuation in rates over that time period.
Yeah, they're strange. I mean, when I go and value houses, I sort of say to people in parting, do you know what your house is worth? And most people say, yeah, I've got a rough idea. I say, okay, well, don't tell me. I'm going to come back to you with a number by the end of the day, and hopefully my number and your number are quite aligned, and it's a positive conversation. And most of the time, you're giving people good news. At the moment, your first question, I imagine, is almost when did you start your last mortgage? And if it was more than 2 years ago, it's going to be a bad phone call. And if it's within the last 2 years, it's probably going to be a decent phone call.
Yeah, absolutely. And what does help with that is that people do want to speak to a broker and shop around, because if you're coming off of a 1 point something, you want to find the best deal. And that may well be with your current provider, but at the same time, you want to ask that question and make sure you're shopping the whole market, because a
Sure.
3-4% increase, 3.5% increase on your rate is quite a shock to the system.
Yeah, I mean, would it be fair to say that you're potentially talking to people in that circumstance where their mortgage payment is potentially doubling, for example?
It's I wouldn't say doubling. Obviously, there's lots of variables involved, but definitely three-figure a month increases on what their payments are. Um, and yeah, in that scenario, you every pound helps. If you can get a couple of quid saving from going to a different lender, then it's worth doing because hundreds of pounds isn't an easy find. Costs are going up, cost of living's going up. To then hit that on your mortgage,
It's not only
it's
your
just another
mortgage.
cost you can do about. Yeah.
Yeah, exactly. It's not only your mortgage, everything across the board is up. Yeah. It's interesting because when I started doing this, I think I said to you last month, when I started doing this, most people would go and find a house and then arrange their mortgage afterwards. And there were a lot of companies that I interviewed with when I first started considering becoming an estate agent 21 years ago. A lot of people that they would put so much emphasis on mortgage referrals because it was very easy to do them. Nowadays, I mean, I think I've referred one client to you in the last month, Ross. It's not for a want of trying, obviously, but um, people are a lot more savvy about shopping around and they will approach you directly rather than going through somebody like me. You think things like comparison websites for your car insurance, your home insurance, and obviously Money Supermarket and all your financial stuff with your mortgage. They weren't around when I started as an estate agent. Nowadays, people are much more inclined to speak to a broker rather than just go to their bank, aren't they?
Absolutely, and that's the way it should be. Brokers care about their clients without, being too disrespectful. Multi-billion, billion-dollar businesses, international businesses, care about the bottom line, the costs, right? Whereas we are here to service the client, and that's why I would recommend using a broker rather than going direct to your bank because equally, as we spoke about last month, if you go direct to your lender, they won't tell you if the rate drops before you complete or before your new rate starts, which a broker will be told and can potentially access a lower rate before. Um, I said last month that my advice will always be lock in as soon as you can. If your remortgage is coming up, lock in as soon as you can and get your broker to keep an eye on the rate. If that rate comes down, they'll ask you if you're happy to reapply for their lower rate. Equally, as we've seen with Iran, if the rate goes up, shoots up, you are protected from that. You've locked in at a rate that is definitely secure. So that's kind of worst case scenario. It can only go down if the rates do that.
Good, good to know. So before we started recording, we had a brief conversation, didn't we, about whether it's busier or quieter at the moment, and our opinion on that differed a little bit, didn't it? You said that you found it's been a lot quieter in the last month. Why do you think that might be?
Yeah, so I like to keep in contact with the with people that are referred across. So it's as you say, people often speak to a broker as stage one. They haven't found a property. They just want to know affordability, what they're able to borrow, and what the monthly repayments roughly look like. Obviously, it's a broad. The numbers aren't specific. It's not, they're looking at roughly they can do. And I like to keep in touch. So I spend my Friday work from home day calling around my clients just to see how they're getting on and they had any luck in finding a property.
Pretending you're working
And
on a Friday. Yeah.
did sorry?
Pretending you're working on a Friday, just
Oh, absolutely. Yeah,
talking
yeah,
to
yeah.
them. Yeah.
And a lot of the message I got last week was, rates have gone up. We want to wait. We're concerned that when we spoke originally, which might have been end of last year, beginning of this year, that we were going to, our mortgage payment was going to be X amount. Now it's going to be higher. So we're looking to sort of see what the market does. But you've got an alternative sort of
Yeah.
experience to that.
Yeah, I've been busier in the last 4 weeks since we last spoke than I have for as long as I can remember. Um, Now, the spring market is normally quite good. Certainly, mum and dad with a couple of kids, they do tend to put their house on the market in the spring over Easter. Easter fluctuates obviously, but somewhere around that kind of time because the weather has changed, the clocks have changed, people are put it on the market now, get it sold. The garden looks a little bit better. Everybody's in a better mood when the sun is shining. And if we get it sold now, then we're going to be moving in July or August when the kids are off school. We can tie it in with, a family holiday, move house, etc., etc. School catchment as well. But going back to my comment from earlier about people maybe sorting their mortgage and then talking to an agent, whereas 20 years ago it was find a property and then do the mortgage after. Whereas people are coming to you first, I imagine me being busy in April and going into May is probably as a result of you being busy in January and February because people are doing their groundwork with you January and February, ready to then put it live with me in April. Would that be a reasonable assessment of the last 3 months in general?
Yeah, I think that's fair. It's interesting, isn't it? Because historically, it would be the other way around, as you said,
Yeah,
that Ross, I'm really busy. Here are the leads based on the fact that I'm really busy, whereas it's actually cart before horse. Um, but we spoke about this last month. People have to move. If they're in a situation where they have to move, they have to move, and that it's sort of irrelevant whether the what the market's doing
yeah.
because they want to get on the housing ladder or to move up to the next place or they're getting separated or whatever the situation is. They haven't got a choice. So yeah, there's never nothing going on.
I think
There's always
I,
something, but
I
yeah, I
think
think the
that's
people that can wait are waiting at the moment is what I'm seeing.
yeah, absolutely. I would definitely agree with that. I think that the reason I mentioned mum and dad with a couple of kids is, school catchment. My child is leaving primary school and going to secondary school. I used to take them to, that road. And in September I'm going to have to take them to that road, and they're going to need a desk because they're going to be getting homework and all that kind of stuff. That prompts a move. I've got a client at the moment that's pregnant. Obviously, doesn't matter what the mortgage market is doing. If you've got a baby coming, you need more space. I've got a client at the moment that's got a serious health issue, which is prompting a move. Again, money doesn't matter to them. It's to do with their health. Um, these people that have to move or there is a deadline or some kind of real motivation, they're going to move no matter what, and they're going to find the money if they have to. The people that are like, maybe this year, maybe next year, I'm thinking of retiring. Shall I retire now? Shall I maybe go semi-retired, etc., etc. Those kind of people are putting things off.
Yes.
So, and that probably ties in with the bottom end of the market. We spoke last month about first-time buyers. If you're a first-time buyer, if you're 21, you'd have been a first-time buyer historically. You're probably not a first-time buyer in and around London at 21 now because of the numbers involved. You stay at home with mum and dad as long as you possibly can until they've had enough of you. And if you're lucky, 21 can become 30 almost. The buy to let sector, Ross, again, we spoke about it briefly before we started recording. I look after probably 120 landlords, roughly. Um, some of them managed, some of them let only. People that are thinking of becoming landlords has rapidly declined, and the amount of people that are looking to exit, I'd say probably 25% of the landlords that I deal with at the moment are either selling up or have asked that question about what would I get if I sold up. How are you finding the buy-to-let sector of things at the moment?
Yeah, I think very similar experience. All of the buy to let we do really, uh, all a big, but a large proportion is limited company. We don't do a lot of personal name stuff at the moment. It's just not the way the market's set up as it is. And yes, similar. I think people who've got one or two buy to lets are less inclined to expand their portfolio and may even try to offload them because they feel there's other ways of investing that money that they can either make the same for less work or make more. Um, and there's things like so portfolio landlords. Some are just downsizing, but reducing the size of their portfolio slightly, just trimming. And then we're also not seeing. We used to get a few people who would rent out their current residential property and then use that money to buy an onward residential.
Yep.
That doesn't really happen much anymore either
The sort
because
of
of the stamp
accidental
duty.
landlord. Yeah. You
Yeah, we've got one or two, and the people that I speak to who are clients who have done that aren't necessarily where they thought they would be, having kept a property on. the cost involved and the work involved for what is a limited amount of income, then they probably, in hindsight, wouldn't have done what they've done. Is the conversations I've been having.
Yeah, I mean, I've got a landlord at the moment. I think he's got about 10 or 12 properties. He's one of my longest serving customers. He's got a property, a one bed flat. He bought it as buy to let. Obviously, he's never lived there. It's always been a buy to let investment. The amount of markup on what he paid for it over a decade ago and what it's worth now is nowhere near what he'd hoped. The service charge is absolutely killing him. Dead money really. You're paying for somebody to cut the grass and buildings insurance and all that kind of stuff has gone up. His mortgage has gone up. Legislation is now working against him. Tax is working against him. Running repairs, all those costs have gone up. And he's like, why am I doing this? What is the point? But can't sell the thing because it is a buy to let property. He can't sell it to another landlord because they're doing exactly the same calculations as him and wondering why he bothers. And he can't sell it to a first time buyer because, as we mentioned earlier, they're staying at home with mum and dad a little longer. And he now finds himself trapped with the lower end of his portfolio. He's fine with the 2 and 3 bed properties. But the one bed properties, the smaller ones that he's got within his portfolio, the numbers just don't stack up. And I think if you're looking to maybe hold a 3 bedroom freehold house and rent it out to a family, you might have a long-standing tenant for 10 years and it might be worthwhile. But certainly with the flat market at the moment, it's really, really stagnant. So I think my general message, I don't know what yours would be, Ross, but my general message as we wrap up is if you're in the middle part of the market, if you are late 30s, 40s, 50s, 2 bed house, looking to upgrade to a 3 or a 4 bed house, you've got young children that are going to become teenagers, move from primary school to secondary school. That part of the market is still reasonably good. It's not busy, but it's not terrible. But if you're at the bottom end of the market or the very, very upper end of the market, it's tough. And you need to have more conversations with people like Ross and myself, and you need to do your calculations and your planning better than you ever would if you want to be successful because it is harder. It takes more prep, I think, and more
I
discussion.
think that's very fair. I think
Yeah.
that's very fair. I think we spoke a little bit about flats last month, and that market is particularly tough at the moment. I think there's also I just work once a week in Sevenoaks at an office up there, and they're just about to finish all the flats on Sevenoaks High Street. There are a lot of flats coming onto the market, um,
You might see
and
me down there. I've got something coming up. So
excellent. Well, there you go. That's for episode 3. Um, but there's more flats coming onto the market, which is interesting because there's a big governmental push to build more properties, and flats are easier because they take up less space, so to speak.
I think it's
However,
very
I
area
don't see it.
specific as well, Ross. If you're prime commuter belt, Sevenoaks, half an hour into London, it's a nice affluent area. It's very different to if you're, a little rundown part of London. Yeah, go on.
This is true, but by putting more onto the market, it makes it harder to sell the ones that are already up for sale on the market as it is now. So we will end up
Very true.
with a lot of I think a lot of properties or flats that are struggling to sell for that reason. And we also talked about first time buyers being touching on it earlier, being older, and you used to start in a flat and go on from there, and that doesn't necessarily happen anymore. First time buyers are in their 30s. They want to move into a house with a garden because they want to start a family or they've already got a family.
Yeah.
So the flat market, for a number of reasons, service charges, another one, as you spoke about, is struggling. Um, and that from a buy to let point of view, again, people want out and they can't sell them because other people don't want in, so to speak, because they can see what the landlords are going through, as you said.
Yeah, and if you tie that in with the writer's rent thing, which kicks in on Friday, 1st of May, that will be live by the time we chop this up and broadcast it. Um, Almost every tenant I meet at the moment, when I ask them why they're moving, the question is, my landlord is selling. I don't really
Yep,
want to move, but I have to
yep,
move. And I think
yep.
some of these things that are brought in to help tenants are actually in the short term at least, working against tenants because there's a lot of people having to move around and spend a lot of money and pay a higher rent, um, even though they don't want to. So yeah,
Yep.
be interesting to see what happens. What's your prediction for the next month, Ross? If you had a crystal ball?
If I had a crystal ball, my mortgage would be a lot lower than it is. Do you know, genuinely, it's really, really hard, because of the upheaval with this year. The the advice that we were giving January, February was that the Bank of England was going to lower rates slowly this year, and then suddenly we've had this shock. So it's very hard to make short-term predictions. As it stands now, I will go with the facts. Lenders are on the erring on the side of reducing rates. I hope to see that continue and to bring it closer to where we were at the beginning of the year.
Good stuff. Thank
There
you.
is a Bank of England base rate meeting on the 30th, so that will give us a bit more
Tomorrow.
clarity
Excellent.
tomorrow. Well, I didn't want to say tomorrow because I wasn't sure whether it's going out.
Not tomorrow. Last week. There was one last
Yeah,
week.
yeah,
I'm gonna
yeah,
tell
yeah.
you in a month's
On
time.
the 30th.
Yeah.
Yeah.
All right. Thank you again, mate. If you need a mortgage anywhere in the UK, but obviously especially if you're in and around Welling, Sidcup, Chislehurst sort of area, Ross is your man. Great service, and he will survey the whole market. Mortgage Evolution. They're the guys you need to get in touch with. We'll put their details down below. And if you're selling anywhere in South London, south of the River Thames, and North Kent, you're going to want to talk to me, and we'll welcome any questions. And we'll see you next month. Ross, take care, mate.
Thanks, Kevin. Appreciate it.
All the best.